The energy market is now at a crossroads and looking for further direction. After reaching three-year highs, oil prices are not going to decline. Yet the pace of growth has also slowed. The energy crisis in Europe is far from over and is expanding to other regions. This means more upside potential for oil. On the other hand, the supply deficit cannot last forever and crude stocks will recover sooner or later. In the meantime, the oil market has reached a temporary balance. Traders are now waiting for the news about gas reserves in Europe. This will help determine market forces and further price direction. Brent crude is still staying below the local high it has recently reached, so the price has failed to return to the level of $80 a barrel. This means that Brent is still going through a correction. The price of oil futures hit $77 per barrel and then started to gain upside momentum at a slow pace. The resumption of a rapid rally and new highs will become possible only after Brent reaches $79.50 per barrel and manages to hold firmly above this level. As for WTI futures, the situation is similar here. The price is still in a correction phase after reaching a recent high and seems unwilling to rise. WTI has settled at the level of $74 a barrel and then slowed down the pace of growth. A steady uptrend will start only when the price manages to hold above the local high of July 6, that is above $77 per barrel. Meanwhile, the correlation between the ruble and the energy market becomes more and more evident. Oil supply deficit supports the ruble so that it remains relatively stable against the dollar and the euro. But we shall not forget about local economic factors that may easily undermine the position of the ruble. Today, markets expect the data on retail sales in Russia. The indicator has dropped from 4.7% to 3.8%. This is quite a serious decline in consumer activity, which points at the worsening economic situation in the country. This fact can be regarded as a threat to the economic recovery and as another factor weighing on the Russian currency. The dollar-ruble pair has been stuck in the range between 72.60 and 73 for almost 2 days. The market seems to be accumulating volumes, and traders cannot wait to see which direction the pair will choose. Both upward and downward targets remain unchanged. Consolidation below the level of 72.50 will serve as a signal for further downtrend on the pair. In case the price settles above 73.10, the US dollar will get a chance to regain ground. As for the euro-ruble pair, it's still trading with a descending channel. The European currency has lost 1.5% of its value over the week. As a result, the euro became oversold and went through a technical pullback. The nearest support is found in the area of 84 points. Analysts assume that the ruble may ease to the levels of 84.80 and even 85 rubles per euro in the near term. This is the forecast for the two currency pairs. In the meantime, the ruble is holding steady against the euro and the dollar amid energy supply deficit. The factors that can support the bullish trend on the ruble are getting fewer every day, while the limiting factors are becoming more evident. Thus, any change in the commodities market may send the ruble down. And that's all for now. Thank you so much for watching and stay tuned.